What's up, guys? Welcome back. Today we're going to be looking at how to use a pattern and wave tool inside of TradingView. So today I have the Tesla daily chart up. Previous lessons we've looked at how to use your Fibonacci retracement and extension tools. I've shared with you my optimal trade entry, custom settings for my Fibonacci tool, which includes extensions for scaling out of with different price targets. Previously, we've also talked about how to draw trend lines, parallel channels, and using the trend tool. So today we're going to be looking at how to use your pattern tools. So to use your pattern tools, the pattern is right here. Again, you click on the little arrow and it's going to give you a drop down that has different patterns. We're not going to cover every pattern today. We will cover some of the more common patterns and how to use those. So let's go ahead and take a look at those. We'll also look at a few of the Elliott Wave counts. If you're curious about some of these things, you want to find out more about the why, how they work, how to trade them, maybe the theory and concepts behind them. You can find really good information on YouTube. You can also find really good information on Google. But the point of this video today is just to show you how to use the tools. So the first thing I'm going to show you is how to use a head and shoulders pattern tool. And so we're going to look for a spot where we could identify where a potential head and shoulders scenario was. Okay, so what I can see here is I can see we had a trade down here. We're going to go something like left shoulder down, head, okay, right shoulder, okay, and where would we be going if we were charting it out and we were identifying this was a right shoulder? We'd be looking for, potentially an equal bottom or something like that. This is fairly clean because it has a, low angle on the neckline. Okay? And something that we're going to be looking for when you're charting your head and shoulders, the way that I learned head and shoulders pattern was that you take the head down to the neckline and then you take that trend line and you go from the point of breakout or breakdown from the neckline, which would be here, and you draw your potential price target. So if you were trading that, okay, head to neckline, measure, okay, here we have the same measurement. This would be our price target, okay, price went down to that, traded right into it. Okay, so that would be a great head and shoulders play. As this is developing, you're saying lower or, in this run, we got a high, we have a low, we have a higher high, we have a low, we have a lower high. Okay, that's going to be your classic head and shoulder setup. You're measuring head to neckline. You're taking that measurement to breakdown of neckline, this candle right here. You're taking that measurement, placing it down to see where price would likely run. Price ran to it nearly exactly. Okay, that was a great play. From there, you caught a move from 194 down to 165 and some change over the course of 1, 2, 3, 4, and 5 days. Okay, so nice head and shoulder play there. Let's move on to another tool. Okay, you can practice these on all time frames. It's applicable on all time frames. If you're a day trader, if you're a scalper, you're looking for those 1 minute micro head and shoulders. If you're a swing trader or long-term trader, you can be using something like this. Say you were trading shares and you were able to catch the bottom somewhere down here and you rode price up. You're looking for that head and shoulders. You're saying, I see a right shoulder, broke the neckline, out, right? Trimmed or exited your positions, you caught a ride down, right, and then you re-enter, or you trim some positions and you reposition with a better price. Okay, and then continue to chart from there, looking for different patterns and different things that are going on using some of the other tools we talked about, trend lines, retracement tools, right? You would use your retracement tool from here to here, looking for a retracement, right? So all of these things can be used in conjunction with each other. And the next tool I'm going to show you how to use is I'm going to show you how to use the A to B to C to D. Okay, and the theory behind this is that wave A to B, which is going to be one point to another, is equal to C to D. Okay, and I'm going to show you what that looks like. Let's get this here where we have some nice clean wave structures. All right. And here we have A to B. Okay, and then we pick point C. So that's an A to B equals C to D triangle structure. And what you'd be looking for is, if this pattern played out, not only are we looking for C to D to be an equal length of A to B, okay, but the drawing this pattern is not actually anticipating this move after this one already happens, but what we're actually looking for is for a return to point A potentially. Okay, so what you do is you grab your line tool and you plot point B. Okay, and look at what that gave you. Okay, when we have an A to B equals C to D, we also then have our point B where we're looking at coming back to, and we also mark off point C. Okay, to see if we take out point B, could we come down to point C? Okay, so it's just giving us some patterns where we can look, and then you can also draw this trend line out from B to D, and it would give you a nice trend line as well. So one way you can use the ABCD pattern is like that. Okay, so let's go ahead and mark that. And some of these tools are just easier ways for you to see what's actually happening. If you're a newer trader and you can't, you don't identify that I should just put a level here because it's the top of a wick, you can draw that pattern out as it completes and then say, where are we likely to come back to? Potentially back to point B. Okay, something else I want to show you, which may not be as commonly used, but it is the Cypher pattern. And so with the Cypher, it's also multi-point of contact to draw the Cypher. And if you want to see more examples of what ciphers look like, you can go on Google, pretty clear images of what they look like. We're going to do a couple points, okay, right here. And then what we're actually looking for with the Cypher is to use your trend line, and we're looking for entering on a confirmation of point D. So the candle following point D on this structure, we're looking for entry on that. So this is how you're going to trade something like this pattern. And I'm going to point this out to you with an arrow. So we have, right, first point, second point, third point, fourth point, fifth point. So 5 points. Okay, in this down closed candle, we see an up closed candle, but that doesn't necessarily confirm there was a reversal. So we're looking at this candle right here to close. Okay, you enter there, you target this spot right here. Okay, and if this point was higher before it went lower, you'd be targeting, your trend line would be different and you'd be having a higher target. Okay, but this again just gives us a pattern formation of something to look for as far as whether or not, or where we're going to look to target as a, entry and exit. So if you throw up like a tool like this, which I'll teach you how to use later, but if you look at risk reward, you target a 1-to-1 in that candle specifically. You can see it's just above where our exit point is. This price ran much higher than this exit point, but that'd be kind of your entry exit when we get to that line. Okay, and if you did move it down just a little bit so that it connected with the line, and we'd be targeting like a 1-to-1 on a trade like this at the minimum. and then you could continue to let it run, or you could move your stop loss up so that you mitigated risk. Potentially, as price ran in your favor, you'd move the stop loss back to zero or even back above so you don't take a losing trade. And I'll go ahead and show you one more. Let's look at this move here. So on this particular one, we'd be looking at taking the position in D, and you could be looking at potential run higher, and you could be potentially looking at this as a stop loss. So do we respect this? If it trades below, you exit the trade, and we'd be looking for price to actually move higher up into this right here. Okay, but also if you were using a similar thing as this right here that we just showed, if we were using our forecast tool, which again I will show you in a later video how to use that, but if you're entering in confirmation right here and you were just targeting a 1-to-1 to begin with, you would see right here, okay, that it hit the 1-to-1, never actually taking the stop, and as the trade develops, you move the stop loss up. Eventually you get to zero, or you move stop loss even into positive so you don't take a losing trade. So one way to use the Cypher, in this particular setup, I don't like how aggressive this trend line is, so I wouldn't have said, hold long until we hit that. Now on this one, because it was a declining trend line with a bullish Cypher, price ran through it, you could have continued to, after this candle closed above your exit point, you could just continue to see if it ran up or if it came back down. So again, if you want more information on those tools specifically, I would recommend looking on Google for more examples of different ciphers. I didn't show you any bearish ciphers in this point, but ciphers are a type of harmonic pattern. It is one way that you can draw patterns and you can trade them. There are indicators that help you use harmonic animal patterns and harmonic patterns, but it's not something I use very frequently. So another pattern tool that I want to show you, and once you get to a more moderate or advanced level of trading, you can draw these triangle patterns on your own, but I'm going to show you a triangle pattern. Okay, so here you can see we draw 4 different points, A, B, C, D. Okay, low, swing high, next swing low, next swing high. You can see it draws the triangle for us. Now with any kind of triangle pattern, you're looking for a break up or a break down, and you can enter. Again, using our projection tool, we're going to look for the confirmation of the candle, right, that rejected. We're going to target a 1-to-1 in this event. The 1-to-1 straight out of the gate as it's set does not, because we don't have a clear indication of where we should set, price wise, a stop loss or a take profit. So what I would do is, if I was trading this pattern, I'd be actually moving my stop much tighter for a breakout of the original triangle, because we're breaking down. So if we broke back up to this trend line right here, okay, and I'll show you what a trick is that you can do. But since that triangle pattern tool only gives us the actual triangle, if you draw the trend line and extend it through like so, okay, then you could say that if price, see, we broke down, so if price were to run back up anywhere into this trend line, you could call that your stop loss. So, as days went by, and we're further down, the trend line, is further down in price as well. But let's just say out of the gate, we'll put it at the apex, which is the corner of these two lines. Okay, so that original, target became a 3.8 to 1. So we're going to adjust that down only to a 2. Okay, if we adjusted it to a 1, wouldn't be much of a move. Okay, so we're going to target on this one a 2. 2 to 1 is a pretty good risk reward, especially in terms of how much price can go. And so if you were entering on the first breakdown, you were targeting the 2 to 1 on this case. Okay, price hit it, and that took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days to hit your target. Again, on daily charts, you're playing longer term positions, whether that's options or stocks. Okay, so that is how to play and how to use a triangle pattern tool on TradingView. Now, I'm not going to teach you guys the 3 drives because I don't see a clear indication of a 3 drives pattern. Something I am going to teach you guys is Elliott Wave, which Elliott Wave is a whole theory about counting the wave count. And the Elliott Wave theory is basically that price is always consisting of impulsive waves and different kinds of wave structures, and that all the way down to the lowest time frame, that they just kind of repeat the same kind of counts. And so you have 5 wave impulsive waves, which are 1, 2, 3, 4, 5, and they can be bullish or bearish. But the wave 1 is usually in the direction of the trend. Wave 2 is a correction. Wave 3 is in the direction of the trend. Wave 4 is a correction. Wave 5 is in the direction of a trend. So what I am going to show you, or where I'm going to show you, is the possibility of this being a 5 count. Okay, so let's look at 1. 2 is a deep correction. 3, 4, and 5. Okay, so it's a little bit sloppy. It's not the cleanest wave count as far as like how structure, how you kind of want structure to look in wave counts, but it is a 1, 2, right? 1 being in the direction of the trend, 2 being against the direction, right? 3 being with the direction of the trend, 4 being against, and 5 being with the direction of the trend. Okay, so we could say that that's a possibility of what's going on here. Now, let's also look at what we currently have going. Okay, if this is a reversal, we don't know. It could be a corrective pattern, right? But this could be a 1, 2, 3, 4, and potentially a 5. Okay, this pattern has not finished playing out, but that's certainly something that it could look like. Okay, so that's the 5 wave Elliott Wave tool. Now the next one I'm going to show you, I'm going to show you the Elliott Wave correction tool, which Elliott Wave correction is how to chart corrective patterns, and those look like ABC moves. So they're actually only 3 waves. So just an example, because we don't know how this is going to play out yet, we so far have an A and a B and a C, right? So if this was a 5 wave move down, could be having a corrective pattern up, and if that was the case, we could see a corrective move down. 1, 2, 3, right, 4, 5. So we don't know what's happening yet because that hasn't played out, but that is, how to use the corrective tool. It's 3 points. Elliott Wave is really hard to trade. It's more of a gauge of looking at what kind of pattern we came from, whether it was corrective or whether it was impulsive and trendy. Trendy are going to be 5 waves, corrective are going to be 3 waves, right? So did we just come out of a 3 wave correction? Are we coming, down on a 5-wave correction? Right? If that down move is 5 waves, that's trendy. We might see a correction of an ABC and then see an additional 5-wave move to the downside. So hard to trade. Certainly don't trade Elliott Wave, but I do use it sometimes to just see kind of where we are at in the count. Similarly, you can use Elliott Wave as a ABCDD or ABCDE, okay, and it's just going to be different letters instead. Okay, but same kind of thing, 5 waves, right? Just using letters instead. So those things can all be adjusted. I've showed you in previous videos how you can double click or use the settings tool to change those. And then some of the other Elliott waves I'm not going to go into. Their combination. Elliott wave theory is very complicated and in depth as far as you can have complex patterns forming WXYZ. You can have zigzag. You can have impulse. Right? It's a whole thing to study wave structure, wave counts, and the movement of waves themselves. Because when you get chop, it's often horizontal and zigzag. When you get rapid moves like this, it's very impulsive. So I'd say if you're interested in Elliott Wave, you can definitely do a deep dive. I know there's some really great tutorials just specifically on Elliott Wave counts on YouTube. That's how I first learned about them. There's a lot of reading material. There's a lot of visual imaging if you do some Google searches. So I encourage you, if you are interested in learning more about that, just do some research. There's a lot more than just using the tools themselves. The tools are just how to use them. It's not the why to use them, right? So that's going to be it for the patterns and wave tools section of our tutorials. On the next video, we'll be talking about using your projection tools, your long position, your short position. There's tools for forecasting if you want to draw what the next candlestick might look like, or you want to grab a segment of bars and then project them. You can move them around to see what what it would look like if maybe you identify a pattern that you've seen these candles play out before, and you expect them to play out again, or maybe structure looks the same as it currently looks, so you're looking at the movement that happens after that, and then you project it out here. And so different things that you can use as far as these projection tools, and you can also do some fixed range volumes, anchored profiles, right? So different things. Going to continue to show you how to use those tools. We might jump in and put it all together as far as projections, and then these brushes and arrows and shapes, right, and text anchoring. So there's not going to be a whole lot of meat and potatoes with those kind of things because they're fairly easy to use, but I still want to show you how to use them. And so look forward to the next episode. After that, we'll start talking about a little more detailed aspects of trading for a little bit more advanced but still beginner level. So look forward to having you guys here at the next episode. Thanks.